Hey, so I was checking out an MLS listing. What in the world are terms?
That's what we're talking about today.
Welcome to the Utah Real Estate Show podcast, the show where two agents and a lender help buyers, sellers, and real estate professionals to understand the ins and outs of real estate.
Hello and welcome to the Utah Real Estate Show. I'm Tyler Kazare, Utah Real Estate Agent.
Jason Christiansen, mortgage lender.
Eric West, Utah Real Estate Agent.
In our episode, we're going to talk about financing terms. And this is referring to when the seller puts down on the MLS listing, what are the terms that they would accept as payment on the house? Mm-hmm. So what are the most common ones?
Just super common. Got cash.
Yes.
Conventional.
I'll take cash.
FHA, VA, USDA.
Mm-hmm. Okay, so let's hit every one of those pretty quickly. So cash, briefcase of cash. Who's not going to take cash?
Right, cash. Typically it'd be wired, but whatever.
Everyone will take cash.
Should be very low contingencies.
Yes.
Yeah. Conventional, your next greatest common denominator.
Yeah,
common denominator?
It's very common. Yeah, it's very common. And this is your traditional quote-unquote mortgage, right?
Right.
I got a mortgage on the property. Most likely they're talking about a conventional mortgage.
So don't qualify for conventional. Look into some fringe. FHA is the next one.
Yeah, your federal housing loans. Those are your government loans designed more for your people who may need a little bit of assistance, or your first-time home buyers, lower down payments, better interest rates.
Yeah. We got a couple other government loans.
VA.
Mm-hmm. Military.
Yeah, military.
USDA.
And that's non-high density or outside high density rural housing.
Rural.
Right? Uh-huh. So it's out in the middle of the boonies somewhere. Okay, now those are the most common ones, and that probably represents something like 85% of the stuff that's out there.
Before we move on,
yes,
even though they're common, you need to make sure that they work. So, if you're not going to accept FHA or VA offers because you're worried about the mandatory language, don't put it. If you're in an HOA that's maxed out on investments and FHA won't approve the area, don't put FHA. If you're flipping a house and you've had it for 30 days,
don't put FHA.
FHA is not going to work. You can't get around the 90-day rule.
Don't do USDA in the middle of Salt Lake City. That's a bad idea.
Yeah, so as a listing agent, you need to know what these loans are and does your listing apply, and educate your client for it, because, a client's always going to want to do cash.
Yes.
But if they say, hey, that's all I want, I only want to do cash offers, is that a smart thing to do?
They may get more money financed. It's possible.
But they could be limiting several different other options out there because they don't understand those other options.
Yeah, they're most likely limiting how many buyers will even look at the property, which is shooting yourself in the foot.
Let's throw out a fringe one, exchange, because this kind of ties into the FHA conventional rules too.
Okay, so an exchange has to do with 1031 exchanges. Mm-hmm. They're investment properties, and if you have no idea what we just said, come talk to a lender or a real estate agent, because it has to do with deferring your taxes and capital gains.
Right, but you may not be able to do an exchange if you're in an HOA that's maxed out with investment properties, and they want to keep their FHA approval, so they're not going to allow any more investment properties. You've got an owner-occupied unit you're selling. They can't do an exchange. Don't list it.
Or you may not be able to get out of the property very quickly, and you have to have a long deadlines and maybe a 60-day rent back.
Yeah.
Once again, that ties into it could hurt a 1031, so be aware of those.
All right, so let's talk about a few of these other kind of fringe styles, right? We did a search tonight, and we looked for assumption properties, like who's willing to do an assumption on the property. 2 properties in the state of Utah. 2.
Well, they're not that popular right now.
No. But so first, what is an assumption? And then let's say why they're popular.
Okay.
So an assumption means that the buyer is going to get the seller's loan. They are going to assume the loan. They're not just going to make payments on it. Mm-hmm. The loan will become theirs.
Right. And there's 2 types. Simple is, I'm just going to give it to you. Like, you're going to assume my loan. I am like a co-borrower.
Yeah.
At that point.
You're not released of liability as a seller.
No.
But it's easier for the buyer to get it because you're still on the hook.
Yes. Yeah. So as a seller, we don't recommend that for sellers.
Yeah. So do a qualified where the seller assumes all liability.
The buyer
assumes all liability. That's their loan. They might have to have a second. You as a seller can look at doing a second, or you can make them come in with the difference.
Yes. Okay, so now, why would somebody want to do an assumption? Right now, probably not very many people want to do assumptions.
Interest rates were a little lower for a window back in the past, but in the future, if interest rates get back up to the 6, when I bought my first home, 6 was a great rate.
Yeah.
But I've heard people at 8 and 13, right? But so interest rates are on a climb.
Yeah. And so in the future, if those interest rates are high and you have an assumable mortgage at 2.7% or something like that, that is a huge marketing aspect.
So these are typically FHA or VA loans, and if you're looking at doing a VA loan assumption, talk to a lender. Look at the liability that's associated with that.
Okay. So those are assumptions. All
Yes.
right. Now let's talk about another one, another acronym. What's a DPA?
Yeah. Down payment assistance.
Yeah, very good. Okay, so
One mind.
one mind, yes. So down payment assistance basically means that there's some program for people who don't make as much money that's going to help them qualify a down payment.
So if you know, I mean, there's down payment assistance loans that cover the state of Utah. But if you know you're in an area that has a special program, put it in there. DPA, this will work for DPA. This is the DPA it works for. This is basic guidelines.
Yeah.
They just help out the buyers.
Yeah. And okay, so let's kick over another idea, right? So what about commercial financing, right? What is commercial financing? What has to be financed commercially?
Well, so like 5 units and up has to be commercial or mixed use where you have an income generating part. Like you have a restaurant on the bottom and a house on the top.
Yes.
And it's one property.
Because a lot of times people think of commercial, it's got to be like a restaurant or a retail store.
Yeah, retail space or industrial or something like that.
5 units or more.
Because it's making income.
Right.
Yeah.
You're no longer conforming at 5 units.
And one that we hear all the time as real estate agents is, hey, I'm buying a fourplex. I need a commercial loan, right? This would be a bad idea. One, because there are way better programs.
Yeah, you can do it cheaper.
But you don't have to. That's the thing. You don't. With 4 units, you're still kind of like under the radar. You're not a big player.
You have options.
You can VA loan that with 0 down.
Awesome. That would be awesome.
Yeah.
5plex, no VA loan.
Yeah, you can't do that with a
You're
5plex.
straight to commercial.
Yeah.
Or you can get into seller financing.
Which is another way. All right. So seller financing is awesome. That is like the true wild west of financing in real estate. Right? Now, if that scares you, talk to one of us. Right? You usually are going to have an attorney involved to help you draft those documents. If you think it's awesome, like cool, let's get it.
Well, why in the world would you do financing for a seller when they could go to a lender?
Yeah, if traditional financing won't touch them, why would you do that? It's
Because I want to make money.
because you want to make money.
So a traditional lender won't touch them because they recently had a bankruptcy.
Right.
Their credit score's low, or they don't show income.
Yeah,
right?
all sorts of different options, but they still qualify. I mean, I've seen seller finance go through on one of our deals that was a $1.7 million home. The guy put down 30% and then paid the interest rate that the seller chose for the 3-year down payment or 3-year balloon payment.
Yeah. So as a seller, you take different terms than a bank would take, make it worth your while, and make sure that everything is written and recorded well, so you can exit cleanly.
Yeah. So, and a seller finance gives you a lot more options. It just opens up the deal a lot more. And if it's agreeable to both parties, then it works, right? And you can make that happen.
What about lease options?
We're just working on a lease option in the recent past, right? A couple of days ago. And they fall into a couple of different categories, right? One is a month-to-month lease option to purchase. And these are rent to own, right? That's kind of like, people know that phrase. You're renting right now, but you want to own it someday. You're either renting month to month or you're going to rent on a 12-month lease.
Yeah, yearly.
And instead of calling it earnest money, you're going to call it option money. And you have the option to purchase this property at this set price for up to whatever the timeline specifies. Usually that's a year.
So both the lease option and the seller financing have unintended consequences to your seller. So double check, because like if immediately they vacate the property and it's a rental, flat out rental, they can offset their debt with that income. If they're doing seller financing or lease option, they may have to have those payments for 12 months before they can offset their debt. So don't set yourself up or your clients up for failure.
Yeah.
Well, and that comes into all of these different loans. There's so many different options within each one of these. You need to talk to your lenders, you need to talk to your real estate agents, have them explain all the different options, which is a smart way to do it, which is not so smart, and so you can make an educated decision.
Yeah.
Right.
And if one of these things like that we talked about here tonight sounds like something you might want to do, definitely talk to us and let's talk about it. We could talk about any of these subjects for an hour. On its own, it could be their own podcast in many cases.
Too long, mate, for you to listen to.
And this is really just kind of scratching the surface, letting you know there are other options.
But yeah, and use these options, use it creatively, because if you have a buyer that needs to go FHA, we would love it that you could search the MLS and find the FHA.
Yeah, don't just when you're building your listing, don't just click through like, oh yeah, we'll do the main 4 and just click them through. Think about what you're doing, of how that is and how that is actually impacting your buyers to find your listing.
Yeah.
Yeah.
Because that's how, a lot of people search. When you're combing through, you need ways to do it.
Yeah.
Yeah, and it matters for the buyer. You need to know as a buyer what you really qualify for, because if you need to go with an FHA loan, you can tick that and say, look, I'm only going to qualify for an FHA loan. I'm only going to search for homes that are willing to accept FHA.
So I guess really what it comes down to, what did we learn today?
Well, on the buy side, know your stuff so that you can search by exactly what you qualify for.
As a seller, as the listing agent, know what programs will have what implications on your sellers.
Well, and remember that as a listing agent, it's your job to inform your clients on what those options are and how to get them the best deal.
Now that we've come to terms, like, comment, subscribe, and share this video with your friends.
If you want to get in touch with us, shoot us a text at 801-228-7687. Make sure you mention the show. You can email us at theutahrealestateshow@gmail.com. The Utah Real Estate Show is a production of Hive Collective at Presidio Real Estate with support from Security Home Mortgage. Security Home Mortgage NMLS number is 178787. Jason Christiansen NMLS number is 240472. Equal housing lender. Not only is this not legal or investment advice, but you should definitely talk to a pro before you make any real estate decision. Every situation is different and should be considered in context. Copyright Jason Christiansen, Eric Wist, and Tyler Kazare. All rights reserved.
Hey, now I'm recording too. Yes. Yes, who's talking now?
It's gonna be a dang good show.
I'm talking now. All right. Hello and welcome to the Utah Real Estate Show. My name's Tyler Kazare.
Good evening. Hi.
Welcome to the Utah Real Estate Channel. I am Tyler Kazare. I am a Utah real estate agent.
Too many I ams.
I am. Tonight we are talking, today we're talking, this episode is about terms, financing terms. Well, I don't feel like this is going well. Tonight, dang it. During this episode,
I think you need to start from the beginning.
During this episode.
I was going to say show, and I got episode. Okay.
Good evening, and welcome to tonight's episode of...
There is no...
Let's touch on this really quick.
Hello and welcome to the Utah Real Estate Show. I'm Tyler Kazare and I am a Utah real estate agent. Stop. No. Hello and welcome to the Utah Real Estate Show. I'm Tyler Kazare, Utah real estate agent.
Jason Christiansen, mortgage lender.
Eric Wist, Utah real estate agent.
And during today's episode... Hello and welcome to the...
Sorry, that was my fault.
Simple's better. Simple's better.
When you assume a loan, you make a...
Yeah. So if you do...
There you go. You just coughed right in the middle of my...
Standing ovation.
That's what I thought about it.
Okay, our next one... Thank you, Eric. You gonna do any more of those?
No, I'm trying not to.
You done with those? Okay.
Thanks for listening to us ramble about random things.
I don't want to ramble.
Thanks for watching. Please like, comment, subscribe, and share this video. Come on.